Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to another episode of Best Stock Charts to Watch for the new trading week. A reminder, we usually go live Sunday nights for Sunday Night Futures Live. It being a 3-day weekend here in the United States, we're going to be going live on Monday night so we can get a feel for how we're going to open up on Tuesday morning. So if you're not currently on our reminder list of when we ready to go live, our 15-minute to a half hour, I forget when it goes out, reminder list, there's a link below. Enter your email address. You get reminded 15 minutes to a half hour prior to us going live. Or don't opt into both. I have a 5-part video tutorial, which is free. You can enter your email address on it, and you get reminded 15 minutes to a half hour prior to us going live. That 5-part video tutorial is a 5-part series on the candlesticks that I favor most, my favorite candlesticks. So it's free, take advantage of it, and get alerted 15 minutes to a half hour prior to us going live. Okay, so we're going to talk about performance. We're going to talk about the charts that we're watching. Those charts that we're going to go over are going to be a mixture of shorts and longs. So IDX is an Indonesian ETF looking really good. Google, short. ARKK, we are currently short. This is inaccurate. I believe it's ARKQ. We have to follow up on that one. AMZN, short. Cure, short. Microsoft, short. SOXL. We shorted that 2 weeks ago. I sold naked puts on it. We made money on the sale of the puts. It was like a covered put, the inverse of the covered call, as we were short of the SOXL. It's a semiconductor leveraged ETF. I capped my profits on that one, unfortunately. So we made money, but I could have made more by not selling that put. Nvidia, our options expired. We had written a strangle on earnings. We made money there, over 100% profit. And I can go into another time how we made more than 100% profit, but we'll just say 100% profit. Keep it simple. Airbnb, we're going to be watching. That was an earnings trade last week. We booked profits there. JP Morgan, we're watching. The banks are in trouble. They're setting up for a rollover. We were stopped out on Tuesday out of our bank position, and I'm glad we were, because that's a leveraged ETF that we're in, and the banks are not looking good. So how was our week? Our week was awesome. Despite the fact you had a tremendous amount of volatility in the market, we've been sticking with our game plan. And that strategy is standoff trading. What does that mean? What it means is that we're not committing to any one major position, long or short, of a stock, whether it be buying options, selling options, buying the stock. It's just not going to happen in this market environment because I'm bearish on the overall market. So what we're doing is we're selling deep out of the money, calls and puts simultaneously. So we're trying to stay market neutral as much as possible. Now, there are trades that we're building up right now. PayPal is one of them, that it's nearing, or it's at on a weekly time frame, an unsustainable downtrend. So PayPal within the next several trading days is going to be a short squeeze. And that's great for us because we're going to build a big position. We're building it now, very small, nibble, nibble, nibble. And we're going to be looking for a reversal day, a bullish reversal day. Then we're going to get aggressively long of PayPal. More on that in the future. Other trades that we closed out this week, I had mentioned Nvidia. That was a 100% profit, actually more. Airbnb, 80%. Shopify, these are all options trades on earnings. Shopify, 50% earnings. DWAC, I don't know what the percentage gain was on that one, but we made a lot of money again on DWAC. We booked profits there. The market is very wonky right now. DWAC is a highly speculative stock. So we had profits, made them real, raised cash. The bank stocks, we raised cash, we're out. So we're minimizing our exposure to the market and any potential swoon lower. And that way we have a lot of cash on the sideline so that we can take advantage of any opportunities that the market might present us. I mentioned earlier we had a profit taken on SOXL. We did well with that. NUGT, the gold mining ETF, we booked profits there. It hit our price target of around $60 a share. We booked profits. And we're going to be looking to re-enter on any pullback, maybe sell naked puts. It's a bullish trade, not a bearish trade. If you're bearish on a stock or an ETF, you buy the options, we're going to sell them. So that way we get a discount at a lower price from where we sold the common stock only a couple of days ago. So a very profitable trading week so far this year. We're doing very, very well, vastly outperforming the overall market. So if you're not currently a member, please sign up for a 14-day free trial offer. And if you're not ready yet, I understand completely. Why don't you just go back, take a look at my unlocked premium content. I've been releasing it lately. You can go back a week or so ago, take a look at what I was coaching members on our premium content and say, was he right? Was it worth it? And then you can decide whether or not you're ready for the 14-day free trial offer. So I think our numbers speak for themselves. Our options trades, the actual alerts, the confirmations are posted in our members area. So it's all transparent. So what else do I have to go over here? I think just the charts. So let's get to it. We're going to go over, first, I have to give a shout out. Folks, the charting software that we're going to be using today is TrendSpider. If you're not currently using TrendSpider, you need to give it some consideration. They have a 7-day free trial offer. I like it so much that I give it away free to our silver and gold level members. So what's so valuable about TrendSpider? Automated technical analysis. You're using an algorithm. What's an algorithm? Well, think about a recipe for a problem being thrown into a charting software and it providing a solution. So what might be the problem? Well, you may not know technical analysis, or you do know technical analysis, but you want to have it validated. What you're seeing is support and resistance levels. Isn't it nice if you had the algorithm pointing out whether or not you're accurate or inaccurate, or whether or not you've missed a support or resistance level? I use them all the time. And it also provides you an alert system that is the best of any charting software that I've ever used. So I use it constantly. You're going to see me use it today. I use it all the time. Take advantage of it. So automate your grunt work and speed up your technical analysis. And there's no sense in doing both unless you're improving your accuracy by using alerts and using the automated trend lines. Reduce costly analytical mistakes by using their alert functionality and find winning chart setups with their scanners. TrendSpider, there's a link below. Take advantage of it, 35% discount code. Go over to their products page, 7-day free trial offer. Take a demo tour. They have a whole bunch of videos for you to watch. So take advantage of it, folks. I mean, great support team. You're never going to be left on your own. TrendSpider, 35% discount code below. And now let's start with our analysis of our watch stocks for the new trading week. We're going to kick things off with IDX, which is the VanEck Indonesia Index ETF. IDX is symbol. We like international right now. International stocks are the place to be. Why? The US dollar is in trouble, in big, big trouble. Our national debt is going to cause a lot of trouble. Inflation here on the rise. So where do you want to put your money? Overseas, where they don't have the problems that we do here. Their stock market is just beginning to ramp up, whereas ours is one big, fat, ugly bubble. So we're looking overseas. IDX, and this is for a longer term. This is not a short-term swing trade. So let's begin with the monthly chart. Now, I want to illustrate to you the power of the automated trend lines. I'm going to click a button, monthly chart, bam. In a fraction of a second, I was able to identify where we have support in blue, resistance in green. And you can see that it's very reliable. We tapped it here, rejection, tapped it here, rejection, tapped it here, rejection. This month, do we break through? We don't know, but it's looking pretty good. So when do we want to entertain investing in the IDX? When we break out, simple as that. Now, going to a weekly chart, I'm going to set up an alert to identify where we may want to get long. And I'm going to overlay monthly support and resistance levels onto a weekly chart. The monthly resistance levels on the weekly chart are represented in dashed line. In solid line are weekly resistance levels. So you could see that at current, we are above, or we're right at, let's say, be conservative and say we're at resistance. I want to make sure that we close there. No sensitivity, meaning no wiggle room. It must close above this resistance level, not near it, not just shy of it, above it. And we're going to keep this active until it triggers. We'll make it for twice. Breakthrough, and our alert is set. I can go to the sidebar here, and there we have it. Now, what I want to do is I want to take a look at seasonality on IDX. This goes back 6 years. Let's see how much more data we have. Good amount of data. March is the second best month out of the year. So a good time, if you're looking to swing trade it in particular, a good time to enter. I would enter here, but I would really be looking to get very aggressive in September and enjoy that October ride up. This is one where you could dollar cost average in over the course of the year. Back to the chart. All right, so on a weekly time frame, take our crayon out. Our stochastics are breaking out. So I'm loving the setup here. We're not ready to buy yet. We have a couple of more weeks left in the month. We want to make sure that we close above the resistance level on a monthly time frame. The next chart up, Google, Alphabet. Okay, so we're going to stick with the weekly chart here. And the reason why I do not like Alphabet is because we're breaking down. We have our lower high, and now we're poised up to set up for a potential lower low on a weekly time frame. Very, very bearish. So a close down below this support level, that would mark a probable continuation breakdown. The next price target would be down here. How would I make this trade? You could do it one of two ways or both. You could sell naked calls deep out of the money, which is very risky. But if you're an experienced trader, you could take that option. Or if you're not experienced and you don't have the capital, I know they're going to do a split soon, but if you don't have the capital to short Alphabet, well, you could simply buy a bear put spread, meaning you buy a put option and you sell a put option simultaneously, and the sale of the option offsets the purchase of the option. It's a little long-winded, but that's another way to trade Google with a defined risk strategy. If you sell naked calls, it's an undefined risk strategy. So again, undefined risk, not for the newbie options trader, please. So Google has two support levels below 25.98. Break down below that mark. We're coming down here, 24.8430. I think it's going to break. ARKQ. First, I'm going to go to ARKK. Now, we are short of ARKK using a naked call, and we're profitable on the trade now because I expected a breakdown out of this bear flag setup. We got the breakdown. Now, the purpose of me showing you this chart right here, right now, is I want you to pay attention not to this candlestick, but to these candlesticks. And then I'm going to bring up ARKQ. Do they look familiar? Right? Very similar. So what I think we have setting up here is a bear flag setup, and that we're going to break. This is going to get resolved to the downside. So ARKQ, short. We're looking to short it. Amazon. We are looking to short Amazon. Why? Amazon has broken many support levels. Those support levels are now becoming resistance. We're putting in lower highs and lower lows. The consumer is slowing their spending. Why? Inflation. They're spending their money at the supermarket, at the gas station. They have less money to spend on Amazon. They're going to still do well, Amazon, but their valuation's a little bit rich, and I think they're going to come in. Cure. This one I was surprised to see come up on my screener. It's breaking down. Head and shoulders setup. Here's your left shoulder, head, right shoulder, and it looks as though we're ready to break here on Cure. This is a leveraged ETF putting you long of the healthcare sector. It's a bull ETF, which I'm bearish on now. So this becomes a short. Microsoft. I've been pounding the table about Microsoft for a long time now. It's very extended on a quarterly, yearly, not so much a monthly time frame anymore. A lot of that froth has come off. but it's been very, very extended, and the air is coming out of this balloon. You could see that we have, again, a head and shoulders setup, left shoulder, head, right shoulder, and we're flirting with the break of the neckline right out where? Right where the algorithm tells you, right down here. So we're getting ready for a big break on Microsoft. You got to be very, very careful. Just when you think that these stocks are done going down, they break lower. I've been trading for a long, long time. This is my third bubble and countless corrections. You'll know when the correction is over, yes, by using the chart, but also by the amount of pessimism and the amount of ruthless selling. Just when you want to close your laptop, not trade anymore, that's your bottom. We're nowhere near that yet. So Microsoft looking very weak. I think it gets resolved to the downside. Here's your support. And in fact, we're going to create an alert here because I want to know, do we break down? If we do break down, you can bet your bottom dollar that we will be leaning in to the short side. There we go. Our alert is set. SOXL, again, this is one that we booked a profit on this past Friday, and I'm still bearish on it. This is a weekly chart. Look at all the topping action. So this is in all probability going to get resolved to the downside. Next support level down at 27.55. So we're going to be looking to short SOXL yet again this coming trading week. I didn't want to put on trades on Friday. I didn't want to carry them ahead of the weekend. So we're going into the new trading week with a lot of cash, and we'll be looking to put it to work in these names that I'm talking about right now. So SOXL, bearish price action, lots of topping action. This is probably going to get resolved to the downside. Now, a few names that I love. You know, we're starting to build our shopping list of names that when this is all said and done, we want to buy. And frankly, the ARKQ, that's an ETF that we may consider, the autonomous vehicle ETF. We like that stuff, but now is not the time for growth. So we want to avoid that stuff. We want to short that stuff, and we want to build a shopping list of other high-quality names. Nvidia. I love Nvidia. We've made a lot of money on Nvidia, but I can't buy Nvidia yet. Even though it's down, it's well off of its highs, it's probably going to go lower. I don't like saying it, but it's the truth, and I will be a buyer, net buyer at some point in time. But as it stands right now, you're seeing a lot of topping action up here, a lot of selling into strength that usually gets resolved to the downside. So I'm thinking that in all probability, we will see the high to mid 100s. Will I short Nvidia? No. What I'll do here is I will sell a strangle, basically a deep out of the money call, a deep out of the money put. So if the shares are put to us, meaning we sell a put and the shares are trading down at 150 or 149 and we sold the 150 put, well, I got to take those shares. Am I going to be happy? You bet your bottom dollar. I'm getting Nvidia at a discount rather than going in and buy it right here, right now. So we're trading Nvidia, but we don't own the stock. That's standoff trading. We're not committing big capital to Nvidia and then praying it doesn't go down. We don't care if it goes up, it goes down. We're still going to capitalize on it by generating cash flow using naked puts, naked calls, strangles. Again, these are all high-risk strategies if you're not very comfortable with trading options. If you're comfortable with trading options, you're good with setting up your probability calculators, you're good at technical analysis, you know where your support and resistance levels are, you'll do very, very well, as we are. So Nvidia, we're neutral on it right now. I think it's going lower, but I love it. It's certainly on our long-term buy watch list, our wish list stock. Airbnb, you know, they're not making money. It's very expensive. Here, they are flashing a PE ratio of 0. So very expensive. But their EPS growth, 101%. This is off of investors.com. So Airbnb, you could see that we have had a nice rally here. Great earnings. I thought 179 would act as support. It did not. It went down with the rest of the market. No great shock. So you can see I have an alert set here at that 179 mark. Now you can see that Airbnb was in a downtrend. You can see this pennant formation we have broken out. Do we retrace back down to 154.19? I think it's quite possible. But given the earnings growth, given that COVID's over, people want out. They have pricing power. If you read their earnings report, their pricing power is very, very strong. So their forward-looking guidance, very, very strong. So what are we going to do here? How are we going to trade Airbnb? Same strategy as Nvidia. I'm not going to buy the shares here because I think they could go lower. So what I'll do is I'll look to sell naked puts at a good support level. If they get put to us, oh well, I'll take the shares. I wanted them anyway, but I'm getting them at a discount. So that's Airbnb. JP Morgan, not looking good here at all. You can see that JP Morgan has put in a lower high and now could be putting in a lower low. I think that this is a bear flag setup. Not confirmed yet. We'll have a confirmation once we break down below this prior low at around 140 per share, thereabouts. So I'm going to set up an alert. And there we go. The one thing I will point out is the down volume last week on JP Morgan was fairly light. So no great rush to get short here. All right, folks. And that's it, folks. Thanks for joining in. Don't forget, take advantage of TrendSpider, 35% discount code below. Become a member. Go check out my unlocked premium content. Then sign up for the 14-day free trial offer. And silver and gold level members get TrendSpider for free. So act now. And don't forget, join us on Monday night for Monday Night Futures Live. We'll discuss the opening price action of the futures market and get ready for Tuesday morning's opening bell. Until then, have a great weekend. Be well.